It is Monday, February 22nd, 2021. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another non-virtual get your ass kicked at Jiu-Jitsu Monday. And, as far as what we were covering today, it was very, basic, kind of rudimentary stuff, although I did have quite a few glitches in my game. I decided to kind of change things up just a little bit this last weekend, because Friday, while I was working with my partner, it became quite apparent to me that my stand-up game has suffered for lack of rolling. And so I made this concern known to one of my other training partners, and he had suggested that I do a wrestling session. And so I'm like, yeah, okay. And so that's exactly what I did. I came in on Saturday and did a session of wrestling, and it was very educational, very educational. And the gentlemen that I was working with were very knowledgeable and very talented. I felt quite honored, honestly. So I was working with them, and I don't know, I guess like a cross grip roll or something like that to something extent. Like, they grab your left shoulder with the right hand. You reach over with your right hand and pull at the grab at the wrist, and like I've done that particular setup in gi jiu-jitsu. They have your lapel, and on that one you want to pull down on their forearm to where you're kind of pin. It's almost a wrist lock, because you're kind of pinning their arm or hand to your chest by pulling down on it, and then you reach and you grab their right above the bicep, and you pull that in really tight and kind of bring your chest forward to where you're forcing that elbow out of its, how should I say it, effective range. Like there's like an angle that you can twist that wrist into and elbow into, to where you're out of alignment of where your arm is all that effective. You get that elbow tweaked up a little bit and the wrist tweaked down, and you can't really use it. So anyway, I was having a lot of trouble with that particular part, but from there you reach through with the left hand that you got hooked up their armpit. You reach through in between their arm and your arm, and you bring that in really tight and then you bring your head down toward, like you're trying to dive between their feet, with your head. And I kept stepping in between his feet and trying to do it that way, and it was incorrect. It was incorrect. And I found that was a habit that I was doing when I didn't have his arm as tight as I could have had to my upper body, and then kind of roll it inward. Anyway, but yeah, so that was, and just kind of flipping it over, and I kept screwing up on my feet where I was stepping in between his feet, where I should have been taking my right foot, bringing it up level with his right foot, and then stepping backward with my left foot. And just in a really high kind of back step, and dropping the head down toward between his legs there, and flip him right over. And so I got in a lot of reps in that, and I need like 20 billion more, and I think I might actually get it by then. But that's basically the perspective that I've been taking with my jiu-jitsu lately, is that I know that part of where I'm suffering is that I really haven't been pushing myself as hard as I should, and there are a wide variety of mental issues that I'm having on that, but I feel like in the last couple weeks or so that I've started to feel more in sync with what I'm doing in jiu-jitsu, and that I'm getting to the point where I can do that second class, and I feel kind of guilty because I didn't do it today, but I feel like I'm ready to really start pushing that envelope a bit. And I had this same problem at the last gym that I was working out at, and it was cyclical there too, where I would get to where I felt more competent by pushing myself to go through that extra period of time when I don't feel like fucking training at all. And usually those are the periods where I've made the most advancement, is when I've just knuckled down and said, fuck it, whatever, go ahead, kill me, come on, let's do it. And I mean, that was how I would start my sparring sessions. It's like, come on and kill me. and after a while, I stopped feeling like they were going to kill me. I started feeling like I had a chance. And after a while, I started like kind of grinning at him, like, I'm going to eat your ass now, motherfucker. I'm going to tear you up. But I'm not quite there yet. I'm still at that you're going to murder me kind of mentality. I don't know. I think that I just vacillate because I don't have enough experience of things that are like reaffirming the jiu-jitsu in my life. It's like there's not enough in my life outside of jiu-jitsu that's reaffirming it. I mean, I don't live a particularly athletic lifestyle, unless of course you want to consider my fishing, in which case, yeah, it can be that way. I was so fucking tired yesterday when I got home. I completely passed out. I got off the lake and it was weird. It's like when I first got there, it was flat, completely glassed out. And I'm thinking, all right, I'm gonna get out there on the float tube. I'm gonna kick around. Everything's gonna be great. Although I wasn't seeing any birds, and that was kind of a concern for me, because usually birds indicate that there's bait in the area, and if there's bait in the area, chances are there are fish in the area. Anyway, so I get down there to the lake, and by the time I get down to the lake, there's about a 7 to 10 mile an hour wind going, and so when I launch, I get out there, and I'm just getting blown around like a fucking paper plate in the wind. And it wasn't too bad, but it was bad enough that I was expending a lot of energy trying to hold in the wind. So I didn't, and worse yet, I didn't catch a fucking thing. I mean, I was out there for about 6 hours, and I beat the fucking water to a froth. I hit it from several different angles. I hit different spots. I hit different types of structure and stuff. And it wasn't coming together. It just wasn't happening. But I mean, I gave it my best go. But when I got home, and it's like, I sat down at this computer and I hung out for about an hour here, and I was able to, stay awake and whatever, and I felt like I wasn't going to go to sleep or anything. And then for whatever reason, I was, man, I'm kind of tired. I'm going to lay down for a moment. Shit. I laid down, I woke up, it was about 4 o'clock in the morning. I was just so socked out that I passed out to the world and just was gone for about 10 hours. But, yeah. Anyway, enough with all that. Let's go ahead and throw down with some music. And I want to go with my guilty pleasure today because I just feel it. Feel the need. We're going to go with a little bit of Steel Panther for First Dance. And, let's see here. Which song, though? I love this song. Even though it's not like the most intense song, I think it's good. And so here it is. I Ain't Buying What You're Selling. First Dance here on Coin Metal. And that was Sepultura with The Hunt. And as far as what we're going to get into today, I haven't the slightest clue. I've been all over the place. I don't know if you guys noticed this or not, but Monero isn't trading on Bittrex either at the moment. Although they've gone a step further with Monero, and there's not even a price on Monero there. It's actually zero there. So, this is something weird. I feel like something weird is going on there. We're I don't understand why Bittrex is having any kind of issue with regard to Monero. And as far as holding off on allowing XVG to trade before they do some sort of hard fork, I guess, and that one's really interesting to me because they're basically saying until Verge upgrades to version 7.7, they don't intend to start letting trading go on. Well, what if the miners don't decide to upgrade to version 7? Then the network doesn't upgrade to version 7, and it doesn't matter if Bittrex upgrades to version 7. I mean, come on now. We've all sat around and watched as Ethereum has bumbled around trying to switch from proof of work to proof of stake for the last 2 years, 3 years now. So, at what point do we really recognize the responsibility that the miners have and the power that they have over these networks? I mean, they are the networks. And I know there's this practice that people have this conceptualization of cryptocurrencies where the miners are just computers. It's just a bunch of Chinese computers. And that's not the case. The fact of the matter is that a lot of people colo in China. You know what that means? It means they aren't indicating exactly where they are located, and they will indicate something to the effect that indicates that they're in China, they're participating on a Chinese mining pool or something to that effect, and they're operating behind a VPN. There's all kinds of ways that people can obfuscate exactly where they are. And so this instant assumption that, for some fucking reason, that just because they say they're in China, they actually are in China, that's a step too far in my book. I think that there's a lot more going on there than you know. Anyway, I was looking at some of the prices on here. It looks like Bitcoin is starting to come down a little bit. I was anticipating this. I mean, it's hard not to when you're looking at the 7-day chart. I mean, that thing looks like a fucking space needle. So you got to keep in mind your Newton. What goes up comes down too. I mean, it's not always go up. and we can want it to, but it doesn't matter. And well, let's see, it's at 50,000 now. Wow, it's all over the fucking place. Looks like Ethereum's all over the place too. It was down at 1,500, and then now it's at 1,600. Yeah, it's all over the fucking place. But I would wager that Bitcoin is probably on its way down. I had anticipated that it would bar out around 52,000, and it actually broke that. It barred out at around 56,000 instead, and now I think it's on its way back down. And I was looking at that chart, and it's entirely conceivable, according to my eyes, for it to get down there somewhere between $17,000 and $19,000. And I know that freaks the shit out of some of you, but hey, things go up, things go down. And most of when we're seeing it go down, a lot of times what's going on is that people are trying to recover some of their value. You know, they're trying to take some of that money off the table because according to what they see, it looks like it's going to come down a little bit. But another thing that is kind of a background dependency there is how much the transactions cost on the network. You know, when you're paying $100 for your fucking transaction fee just to transact directly on the Bitcoin network, you start reevaluating that whole value proposition, and you're saying to yourself, you know, what did I get sold here? You know, what's the reality behind this thing? And when people try and flex the reality of it, and they're finding out that, you know, that whole LN thing really isn't all it's cracked up to be, or the LN clients that are out there really aren't as dependable as they were assuming they'd be, so on and so forth. And they come back to it and they think, well, you know, what else can I do with this fucking Bitcoin? You know, I can flip it around on the exchange and make money on it, okay. But can I use it in the real world to buy anything? Does it actually operate like peer-to-peer decentralized cash, digital cash in the real world? Does it? And when they're evaluating it according to those contexts, they're finding out that no, maybe at one time it did, and I know it did because I was here. But, you know, maybe at one time it did, that it operated exactly as it's described in the Bitcoin white paper, but that day is gone, at least for now. You know, there's one thing to keep in mind in cryptocurrencies, and that is the cyclical nature of them, both in the interest and the diversity of projects and the focus of them. You know, personally, I expect that there will be another altcoin bloom sometime in the future. You know, I mean, I don't believe that this technology is actually settled in any way, shape, or form. I think at the moment, the regulatory entities out there are still trying to act as proxies for government and get this thing under control. And to what extent that we have seen that actually work, we're still seeing that there's plenty of hacks going on out there. There's plenty of manipulation and all kinds of fuckery going on out there, and exploits and so on and so forth. There's all kinds of fuckery going on out there. And all of the regulation that's been introduced, all it's done is made the fuckery more expensive, meaning that it costs us more. And I don't think that reality is like come to bear on people yet. You know, I don't think that a lot of people have bothered to really experiment with this stuff and find out what the limitations of it really are. Let's see here. But as far as where we're going to go, I got a whole bunch of tabs open still, and I don't know that we got to all of them. I've got no, that's not really where I want to go with it. Man, I got kind of hung up on the Monero thing because it wigged me out. I'm like looking at their network stats, and let's see, their total hash rate right now is 2.1 gigahashes per second. That's not a lot. I mean, that's not a lot. Although I anticipate that that if I were to look, I'd find that the Verge network isn't much bigger than that at this point. I think it might be a little bit bigger, not much. But the number of active miners is 8,256. Pool hash rate for this one is 754 megahashes per second. You know, it seems to me at one point or another that was like how much they were getting from all of the pirate mining going on out there. But yeah, I can't verify whether or not that's true. so I'm not gonna go off on it. Let's see here, though. I'm trying to find us a good article to start off with. It doesn't look like... Yeah, here we go. This one looks kind of interesting. News author today, as a matter of fact. So, this is on decrypt.co. Institutional Bitcoin investors briefly lose $13 billion in biggest ever market dip. Companies hold... let's see. This is by Matthew Salvo. And yes, it was authored on February 22nd, 2021. So yes, penis. Over $13.6 billion worth of Bitcoin holdings disappeared from companies' books today after a shocking market dip. Bitcoin earlier dropped from its record high of $58,000 to $47,700 in just 24 hours, the largest single-day fall in value for the cryptocurrency. This means the cumulative value of 1.3 million Bitcoin held by 41 companies and institutional investors per data tracked by Bitcoin treasuries temporarily went from $76.7 billion to $63.1 billion, a $13.6 billion loss. Oh, the loss isn't over yet. But Bitcoin has done what it always does, it seems, and bounced back. At the time of writing, the currency is down just 6.9% in the past 24 hours, meaning that more than half of those losses have since been recovered. That's still a sizable drop for some companies, though. Business intelligence firm MicroStrategy, which holds the most Bitcoin of any public company, this month sold off $1 billion of debt to buy Bitcoin, but the 71,079 Bitcoin it owns today is worth $3.8 billion. Yesterday it was worth $4.1 billion, a decline of over $336 million. Car company Tesla, which also made a monster investment this month of $1.5 billion, is down $208 million at the time of writing from where it was yesterday. Other investments took a hit too. The Grayscale Bitcoin Trust, which holds 649,139 Bitcoin, is down $2.8 billion. Smaller investment firm Ruffer Investment Company unwillingly shaved $195 million off of its holdings. But it's worth noting a lot of the big dogs on the list are still doing well in terms of when they bought Bitcoin, given that the currency is still up 57% in the past month. As previously reported by Decrypt, Tesla has made crazy profits on its investment, more than with its 2020 car sales. MicroStrategy can't be too worried about the market dip either. Since the company first bet on Bitcoin by investing last August, the currency is up 352%. Yeah, that was wisely timed investment. However, they've been making installation payments, additional ones, as time has gone on. Meaning that they have bought Bitcoin at more expensive prices than their initial investment. But, this was something we predicted a long time ago, that what goes up comes down too. And if you look at it on a long enough chart, it's pretty scary. I mean, looking at it on a 7-day chart here, and there's this huge spike and then a downtail, and I expect the downtail to continue. I mean, when you look at the longest term chart, and I'm on Decrypt, and I got it clicked on max, and when you look at it, it looks like maybe the let's see, what was it? The 20,000 spike is identical to the one that's going on right now. And so, I mean, if you look at that one, it went all the way back down to 3,000 after that. So I don't think it's beyond expectation to see that drop, like I was saying, somewhere between 17 and 19,000. And if, you know, if they think they took it in the shorts on a little 10% clip, they haven't seen shit yet. And I don't know if they're counting on being able to defer those losses or not, but yeah, I could see I can see potential on this chart, on the max chart, for a continued upride, maybe another, I don't know, maybe another $10,000, maybe $15,000, but I do see a precipitous decline in the making, and that it will be extended. You know, it'll last like a long time. It'll probably last, let's see, given the scale of this, I would say it'll probably last a year before it gets back down there to that 19,000. But you know, that's still a lot of time for ups and downs and all arounds between here and there. So, you know, I'm no doomsayer. You know, this is not something where I expect Bitcoin to fail. I just expect people to go through phases of being really euphoric and concentrated on Bitcoin, and then understanding what the transition for them actually meant when they understand that Bitcoin is a separate currency unto itself, with its own rules and its own limitations and its own functionalities and capabilities. A lot of which were never bestowed upon us by any other currency in our lives. But when they come to that point, that's about when they're also coming around to the idea and the understanding that there are other cryptocurrencies out there, that Bitcoin does not run the entirety of the conversation, and that they should probably be paying attention to what some of these other cryptocurrencies are offering. And, you know, it's especially these times, you know, when it gets up really high there, then the US dollar price for fees itself is enough of a wake-up call for these people, you know, because most of the rest of their life is denominated in fiat currencies. And when they're looking at those fees and they're going, Jesus Christ, you know, that could be my electricity bill for the month. You know, that could pay for gasoline for the month. Why am I putting myself through that when I could probably do the same transaction in Doge, pay 10 cents, and be done with it, and much faster to first confirmation on my transaction? So, you know, it's those kind of values are not apparent and are not important to people until they are forced to make that transition and take that look. You know, it's like all these entities, they're all excited about Bitcoin because why? Because number go up. You know, I mean, even looking at this chart, it's sexy as hell. By the time it hit 13,000, it was sexy as hell. You know, I mean, that recovery from 3,000 up to 13,000, that again, sexy as hell. You know, I mean, I'm sure that was really the point where they're looking around and they're going, hey, wait a minute now. This thing might have tanked a couple months ago, or about a year ago now, but it's up 4x since then. You know, if I'd have bought it at that boomer dip down, I could have made a ton of money on it by now. And so they're right here, you know, they're on the side of that Pikes Peak, you know, fucking Space Needle now, and they're thinking to themselves, well, should we stay in it or should we sell some of this off? And I think that a lot of them are going to be selling it off, but they're not going to be transitioning all those funds back into fiat currency. You know, they're going to start flexing that Bitcoin. They're going to be going, you know, I've got 600,000 of these fucking things. What can I do with it? What can I do with it to improve its value to me? I can use it. Well, when I try and use it the way that it's supposed to be used, it's way too fucking expensive. When I try to use it the alternative ways to use it, those are really expensive and they involve a lot of technical debt that I'm really not willing to entertain. So really, like, what do I do? Do I stay with it, or do I try and find another way to do this whole peer-to-peer decentralized thing and keep my money within that? Because I know Bitcoin might be going down now, but it could go up later. And I don't want to have to make that transition where I'm paying that big-ass fee to convert US dollars into Bitcoin, where I'm buying Bitcoin for US dollars. I don't want to go through all that again. I just want to keep the funds in crypto and flip it around in crypto until Bitcoin goes back up again, and then I'll sell some more of it, and so on and so forth. The point being that the money does not go back out of crypto. It stays in crypto. They start looking around and seeing things like DeFi and looking at the ROI on those, and they're saying, well, why aren't we participating in this? Shit, there's even a regulated entity, fucking Binance, that's involved in this shit. And it's a centralized blockchain and whatnot, but we can deal with that, because look at all the services that we could be making money on. Really, it's that simple. Those that are giving us things that we can actually participate in and have control over our funds once we've made them, those are the things that are going to see the most interest, especially over the next few years. And like I said, I expect that there is going to be another alt bloom, because the level of control that we had when Bitcoin was something that was processing transactions in an as-received nature, which it was at one time, the limitations on who could participate were much, much lower. And of course, it was more appealing to mine with like CPUs and stuff, just because the difficulty was much lower there, and not as many people were participating on an industrial level. But I've said this a million times, going to say it a million times more, I'm sure. There is going to be a period of time where that is going to be the most profitable way to do it. Because if you're trying to do it the warehoused way, you're going to find out that, A, when you're trying to impose your implementations on the rest of the network, they're not going to go along with it. You end up getting outvoted. Especially if the kinds of things that you want to implement are too odious to the rest of the user base. They will either depart your project and go and create another one, or they will try and overpower you with hash power on the network. And it really depends on how much this all means to them. If it's an obvious thing where it's like completely clear that the amount of hashing power that you're providing to the network will be insurmountable for the next decade, and there's no way that the public can compete with you, not even the rest of the planet, they'll just give up. They'll go on to another coin that they can participate in, that they actually have control in, and they'll conduct their transactions with that coin instead. And then you'll be left with just a whole bunch of hashing power that you have one choice or another. You can either shelve it all, turn it all off and shit can it, or you can dedicate it to this other coin and go according to the rules that they want to go by. And more times than not, that's going to be the thing that wins out. But then again, you also have the threat that hardware itself is going to get more sophisticated. And we've seen little points here and there where there were entities that were very, very dominant on the network, and where they were displaced very rapidly due to an iterative improvement in hardware. That, like, I think it was like, I can't remember what S series was. It was, but like one of those ASIC miners and the next generation came out. They had all the current generation hardware. They didn't upgrade to the new generation hardware as quickly as the rest of the network did, and they got flushed down the toilet. This happens, and it will especially happen in periods where the amount of return on Bitcoin goes down significantly. So, if this thing happens that I'm talking about, where Bitcoin tanks back down to $17,000 and $19,000, which I think is a good recovery range for it, when it does that, on the way down, you're going to see a lot of these big hash farms that are just going to go bust because they can't afford to continue ops. They're not making enough return on investment. They're not able to pay off their creditors. Shit goes down. They have some tsunami season happens a few weeks before that it's supposed to. They aren't able to get their miners shifted over to the new location quick enough. So on and so forth. Shit happens. And it's happened many times so far. It's going to continue to happen. These players that keep wanting to act like there's anything cemented in space, in this space, just fooling themselves. All of them. Anyway, let me see what else I got on here. I wanted to go deep into that one, but it doesn't seem like there's too much more to it. Oh yeah, here we go. This one's on Coindust.com. Square's 50 million Bitcoin buy is now worth 253 million. And this is by Nathan D. Camillo. And this is authored on February 22nd, 2021 at 3:15 p.m. PST. So yes, penis. Square's Cash App deals in Bitcoin operationally, but a $50 million investment from the publicly traded firm's cash reserves has grown significantly since being announced last fall. Square's 4,709 Bitcoins were worth $50 million when the company announced the purchase in October 2020. Now that Bitcoin is worth a whopping $253 million. Along with MicroStrategy, Square was an early entrant in the corporate Bitcoin sweepstakes. Such treasury management plays inspired Elon Musk's Tesla to invest $1.5 billion in Bitcoin earlier this month. Still ahead of Square's latest earnings report on Tuesday, analysts aren't as enthused about the fraction of Square's treasury, roughly 1% of the firm's total assets when announced, that is crypto-denominated. Quote, there will be a higher focus on the Bitcoin purchases of their customer base and Cash App, said Seaport Global analyst Chris Brendler. It should be a big number in the fourth quarter. Analyst consensus estimates that Square will record $1.5 billion in Bitcoin revenue, but those estimates could be off because of analysts who don't pay attention to the Bitcoin markets, Bendler said. His own estimate is $2.2 billion, a $600 million increase from Square's third quarter Bitcoin transaction revenue. In the third quarter of 2020, Square reported $1.63 billion in Bitcoin revenue, which resulted in $32 million of gross profit from the Bitcoin product in that quarter. Interesting. I wonder how they count the transaction fees, if those are just business costs and thus tax write-offs. Well, I don't know. But yeah, any one of these entities, including exchanges and stuff like that, they all lose when they are holding cryptocurrencies in large volumes. It's just the nature of the beast. Shit's going to go up, shit's going to go down. and you got to be prepared either way. Anyway, let's go ahead and throw back down with some music. Yeah, but where'd it go? Played a lot of good stuff last time, although we did not play any Meshuggah. Huh, how did we get away with that? Well, they're not really a band to start stuff with. Although, I think we can do it. I think we can get away with it. Not that one, though. Not that one. Not anything off that one. Here we go. This is always a good one to start with. Future Breed Machine by Meshuggah. Here on Coin Battle. And that was Exodus with Corruption. And so, I was looking up some other stuff on here. And I found this thing, and it's emblematic of what we've been talking about here. It's on CoinDesk. 25 million in DeFi loans liquidated as Ether price falls. And this is by William Foxley, and it was authored on February 22nd, 2021 at 8:08 a.m. PST. Decentralized finance lending platforms liquidated some $25 million in assets Monday as the price of Ether plummeted as much as 15% to $16.55. And it's currently at $16.46 according to this. Let me refresh this really quick and check and verify that. Oh, wait. No. Yeah. It's $16.43 at the moment. So before somewhat rebounding according to the CoinDesk 20. That's the highest amount in 3 months since November 25th saw 93 million in liquidations. Some 57% of liquidations worth $13.6 million came from lending platform Compound, followed by 33.2% on versions 1 and 2 of Aave, worth an estimated $8 million, according to data provider DBank. Let's check and verify that really quick. Oh, it's not actually showing us anything but a chart. There, quote, there is still a small move, and we still saw gas spiking to these crazy levels, despite Binance disabling all exchange withdrawals. One market maker who asked to remain unnamed said to CoinDesk, quote, I wonder what would happen with a move like we had in March. High gas fees are likely a contributor to DeFi liquidations. Gas denominated in Ether is needed to close out positions so as to not be liquidated. The average transaction fee hit unparalleled record highs on Monday at $29 for a basic transaction, according to Blockchair. DeFi lending platforms enable investors to take out over-collateralized loans. According to data provider DeFi Pulse, some $17.4 billion in assets are currently locked in lending markets, with MakerDAO being the largest at $6.54 total value locked up. Jesus Christ. So yeah, you know, I've been commenting on this for a very long time now, that the fees for these networks, because of things like the block size limit, it will always put these coins in a position where the relative value of the transaction fees themselves will become so prohibitive that people have absolutely no choice but to migrate to other coins where they are not taxed as harshly. Anyway, I got this one here. It's on MSN.com, of all places. Bloomberg. Bitcoin tumbles below $50,000 as caution about rally takes hold. And this is by Joanna Ossinger and it was authored approximately 25 minutes ago. 1 hour ago. But no penis. Bitcoin slid Tuesday after a bout of volatility highlighted lingering doubts about the durability of the token's mesmerizing rally. The cryptocurrency fell as much as 11% to below $50,000. At one point Monday, the digital currency plunged 17% before pairing the worst of the slide. It's still up some 400% in the past year, a rise that dwarfs other assets. Treasury Secretary Janet Yellen and Microsoft Corp co-founder Bill Gates were the latest to weigh in about a debate over the digital coin. Gates cautioned about how investors can be swept up in manias, while Yellen said Bitcoin is, quote, an extremely inefficient way of conducting transactions. You know what, Janet? When you compare it versus transporting physical dollars or physical gold bars, it's way more efficient than both. Continuing, in the background are jitters that the global economic recovery from the pandemic will eventually prompt central banks to dial back easy money policies that helped propel Bitcoin higher. At a technical level, the digital currency looks stretched, according to Miller Tabak and Co. Well, no, it looks kind of normal to me. A monthly relative strength index for Bitcoin is, quote, extremely overbought, the company's chief market strategist Matt Maley wrote in a weekend note. Gates and Yellen muscled in on a Bitcoin discussion that of late had been dominated by Tesla Inc. Chief Executive Officer Elon Musk. In recent weeks, Musk said Bitcoin prices, quote, seem high, having earlier called it a, quote, less dumb version of cash. Tesla this month disclosed a $1.5 billion investment in Bitcoin, while MicroStrategy Inc. boosted a sale of convertible bonds to $900 million to buy even more of the token. Buy that fucking dip. Bitcoin faithful argued the Bitcoin currency emerging as a hedge for risks such as faster inflation and set to win more attention from corporate treasurers, and institutional investors. Others see speculators playing a bigger role and some echoes of the digital coin's 2017 boom and bust. Quote, it's a pure speculative asset, said Nadar Niimi, head of dynamic markets at AMP Capital Investors in Sydney. A pullback in Bitcoin shouldn't be surprising, quote, given the current over-leveraged long positions on mainstream coins, said Annabelle Huang, my apologies, ma'am, a partner at Ambar Group, a crypto financial services firm. Bitcoin was trading at about 49,720 as of 1:17 p.m. in Hong Kong on Tuesday. For more articles like this, blah blah blah, Bloomberg.com. Yeah. And so there you have it. You know, the reality kind of sets in for a moment or two, especially when fees get really, really high. And when you see a spike like that where Bitcoin goes up damn near $60,000, again, it's something to be expected. But you know, exactly where we're at in a movement is yet to be determined. And see, I'm not entirely convinced that we're due any significant downside for the moment, but you know, maybe in a week or so, we might see a little bit of a pullback back to that $40,000 range. I don't like to get too predictive, but you know, I mean, I'm looking at this chart that they've got in front of me here that spans from 2016 to current, and I mean, just according to the angle and the trajectory of everything, it looks like it's due for a little bit of a settlement. Coming back down. But, you know, you can't really stop something like Bitcoin. And I think this is a reality that hasn't really sunk in for a lot of people. I'm having this discussion with somebody on Twitter, and they seem really convinced that it's all locked down into China, and yet dichotomously suggesting that the government there would be doing something to harm Bitcoin. Well, there's a double-edged sword to that. You know, if you do something to harm Bitcoin, or to make Bitcoin do something that you want it to do, that not everybody else wants it to do, the other people will weigh in. They'll do things like sell it and buy another coin instead. You know, and this is a reality that has yet to hit a lot of people out there. You know, and you can tell by the nature of the investments. You know, things like DeFi, you know, where they're all banking on the value of Ethereum being what the value of Ethereum is right now, and if it's up, it's up. If it's down, it's down. But like from wherever point that you actually start, it's all relative, you know. I mean, for a lot of people, where they started in their DeFi projects, they're going to be in the green for a significant period of time. But how long that sustains is completely up to guess right now. I think some projects will last. A lot of projects are going to tank, and the returns that we're currently seeing in DeFi will probably go down a little bit. But I don't know. I think Ethereum is going to be really, really interesting, especially given the number of projects that are being balanced on top of it. But at some point or another, I think the fees are just going to become unattractive for the vast majority of the participants and the shareholders out there. They're going to be saying, you know, looking at this over the longer period, there's no way that we can sustain these transaction fees at this current level. So, you know, we're going to have to be looking at networks that have better capabilities than Ethereum. You know, start looking at things like Dash. You know, maybe that masternode thing really isn't such a bad idea after all. Maybe we should be running one of those. This is a game that has been altered in many ways, but is nonetheless a game. And it's all about retaining our interest. You know, if your coins that you've got, for whatever reason, the rest of the world just decides, you know what, I don't really want this coin, I don't want to deal with this coin, they're going to react. They're going to show you that they do not care for the way that you're operating your coin. That's plain and simple. It's how the economy works. These coins are here to serve us. If they don't serve us in our interests, we take our interests elsewhere. You know, there's more than enough options out there still, and I do believe that there's enough will out there still that says to themselves, you know, this coin is pretty cool, and that coin is pretty cool, and this one over there is pretty cool. You know, but like, what if I took all the attributes that I like from all of those coins and combine them into my own coin, and then get a whole bunch of my friends together and say, hey, yo, if you participate in this, you'll get rewarded coins according to this set schedule. You know, if we want to change these rules later, we can, but we got to get a majority vote, like a 95% vote. Got to get a majority consensus on that. Otherwise, you know, whoever it is that's saying no, you guys can go fuck off. Or if a majority of us are saying fuck off, then there's going to be a fork. And some of you are going to go that way, and the rest of us are going to go this way, and never the twain shall meet again, unless we decide that we can kind of amend that. We can ameliorate that difference later on. But that'll be, again, up to the participants involved. And that includes everybody. That includes users, that includes nodes, that includes miners, that includes exchanges, so on and so forth. It does not necessarily involve things like lawyers or governments or any of that. But at their root, these are all people. And so they will have some say. How much control they do have, or what say they do have, is a different story. And I don't think you can really dictate those kind of things with things like legislation and mandates and all that. Efforts at market containment, where you're trying to dictate to the market via policy. If your coin matches X profile and Y profile, then we're not going to allow you on our exchange or some shit like that. These efforts really, over the longer term, all they are is you flinching like a little bitch. If you do something like delist a coin, without it actually being crippled or without it actually being dead, or there being, a significant issue with the network, you're giving in, say, to a government's pressure, or even an international committee's pressure. That's you flinching like a little bitch under the pressure of a bully who doesn't have any real control over you, save what you give to it. And there are always going to be projects that are going to be braver than you. There are always going to be entities that are braver than you. And if you're not out there getting that money, I don't know why you're here. If you're not here to be putting that money in your pocket, I don't know why you're involved in crypto. Self-interest. That's what it's all about. Your incentive should always be to be rewarding yourself for your participation. And that means that you should be evaluating what projects you're involving yourself in and saying, hey, do these projects still deserve my support? Are they living up to what I expect of them? And that includes things like the US dollar and other fiat currencies. Is it best to be receiving payments in these fiat currencies that are doing nothing but depreciating over time because of rabid printing by the central banks? This is again, it's a balance of your own incentives. And at some point, I think the governments even are going to be looking at central banks and the way that their governance policies, their monetary policies, their issuance rates, all that shit. And they're going to be saying, you know what? I don't want to admit it, but these cryptocurrencies and their set rate of issuance, they're like really dependable. And their distributed nature and their global nature, and the fact that we don't have to do things like manage the monetary policy, and we don't have to do things like tell the rest of the market how to do shit. It just like it does what it does on its own, and we learn how to live with it and how to use it to our own advantage. Maybe this whole thing with having the bankers telling us what rates they're going to give us, and maybe that's not really in our best interest, and maybe that's just in the bankers' best interest. This discussion is being had somewhere by somebody. It's not just happening here between my own ears. I'm convinced of that. and the discussion is being had by more than just governments too. There are companies that are doing business. There are even banks that are doing business with one another. And they're reevaluating their balance and their interest structure and their incentive structure. And they're saying, hey, these guys that we've been doing business with for like 20 years, it's only been because we've had absolutely no choice but to do business with them. It's not because they're actually contributing value in the service that they're providing. They're actually subjecting us to a great deal of risk that if we really had a choice in the matter, we wouldn't entertain. So, maybe now that these things called cryptocurrencies are available, we should be availing ourselves of them and, extricating these people that aren't really contributing value to our operations out of our operations. But then again, you have to evaluate, what value they do contribute to you. Not all value is monetary. Some of it could be geographic. Some of it could just be because they treat you better than other options that you have available to you on some other point. Again, not all value is monetary. You've got to evaluate that very, very got to balance it. Got to balance it out right. Just saying that there are new tools that we have to express where we place our values. What do we really value in this world? Do we value ecological stability? Well, that'd be interesting. And to what extent we could actually do that, because there's only so much of the weather that we have any kind of control over. To the extent that we're able to do that, I think that if there were projects that kind of incentivized environmental thinking, that there would be a number of people that would want to participate in that would want to dedicate funding to it. And that in itself would realign the interest structure. If you could go to Africa and you could say to them, all right, well, learn how to be an appropriate guide of this area. Not necessarily to kill all the animals or, not trophy hunting or whatever. But I'm sure there's a lot of wonder in Africa that is only available in Africa. Out of the entire planet, that is only available there. And learning how to monetize that on things like a tourist network or something like that, that I think is, again, rebalancing that value structure. Because there are people that want to go out into nature and want to view it. But maybe it's a little bit dangerous in the current methods. Maybe we've got to learn how to make some sort of fucking drone that people could stand in. Or maybe just flies over some areas that people don't get to see. And, you got the 8K camera out there that's, catching all the zebras doing their shit at 2,000 kilometers away, and you can't even the zebra doesn't even know you're there, man. But, it's providing you with a view into the natural world that you wouldn't normally be able to see. Because just your presence spooks the animals, and they go out 200 yards away from you, and so you don't really see Africa as it's actively natural, except through these tours. Right? There's all kinds of ways that the future can change the way that we value things around us. And cryptocurrencies provide us with a monetary medium that allows us to express that in a digital age. I think I've said all the words that I can to conceptualize that for you. But it is really it's an individual thing how we choose to interact and participate in these currencies, even fiat currencies. And the values that they give us, the abilities they give us, that's going to determine our involvement in them. Anyway, let's go ahead and throw back down with some music. And I haven't been playing any Nothing Face, so here we go. The Same Solution by Nothing Face here on Coin Metal. And that was Crowbar with Conquering. And so, it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. Watch out for your own bunghole, because nobody else is going to do it for you. And so as far as our last dance is concerned, I think I'm going to go with a little bit of COC here. Corrosion of Conformity. Dance of the Dead. Last Dance. Here on Coin Metal. Thank you again for listening. And y'all have an excellent evening. Good night.